Hi there, you're watching the weekly edition of Your Trades on ET Now. This is Priyanka and along with me, Shreyansi. Shreyansi, what a day, at least the kind of move we've seen in last 2 weeks. We saw a smart short covering rally above which pulled the indices above its 200 DMA yesterday. But today, what we saw that longs were created on Bank Nifty. Nifty did cross 200 DMA yesterday, but then today we saw profit booking in heavyweights that actually weighted on the Indian indices. If you talk about the gainers this week so far, auto was in top gear. Nifty auto, which gained nearly 4%. Energy was up 2.7%. Now FMCG was up 2.5%. And let's not forget that now we are going into the earnings season also. We are going with low expectation, and the stocks and the themes and the sectors have started to show up where earnings visibility is visible. Now, if you talk about standout gainers for today, clearly ONGC, the top counter, the top gainer on Nifty after the Jefferies note, and of course crude trading at 2-month high now. 30% of the correction in ONGC stock is overdone, which seems to be overdone. This is what came from the Jefferies note, which actually took the interest of traders in the stock, and we saw ONGC was up by more than 5%. In a week, it has gained nearly 10% now. Consumer names were buzzing, especially the heavyweights, HUL, Nestle, Britannia, Tata Consumer, and even from the broader market now, where the earning visibility is there, companies which are registering the strong business updates, they are being preferred. Avenue Supermarts, if you talk about, surged nearly 15% during the intraday, and this is purely on the basis of the strong business updates. Let's not forget the kind of business update company registered in the last quarter. This was a sheer surprise, and traders took it with a positive hands on it. ITI was 20% up. Saregama was up 16%. Some of the standout gainers clearly. But we saw the real action coming in Power Financier. MK initiated a coverage with the buy rating. Power Financiers like DF Utilities were also buzzing. So a lot of action what we saw today, especially Shreyansi. And this was a week wherein we had low expectation. We had fallen below 200 DMA, and that's what a sharp pullback came in. Nifty, Bank Nifty, but today was not a very good day for heavyweight banks, at least ICICI, HDFC Bank, though Reliance on a flip side was positive.
Yes, absolutely. When you take a look at autos, though, I quickly wanted to mark some of those auto counters, the likes of Tata Motors going home with gains of 3.3% thereabout. Maruti Suzuki as well managed to eke out quite the gain coming in. So those were some of the counters that were buzzing away in trade. Eicher Motors also marginally in the green. So that's the kind of roundup that you saw coming in. But it was really Avenue Supermarts that was shining away in trade. And throughout the trading session, we did see quite the move come in on Avenue Supermarts. In fact, went home with gains of about 10.8% coming in. So that's Avenue Supermarts for you on the back of that robust Q3 number. But other than that, also, you did have quite a few triggers coming in for that particular counter. Other than that, there was Kotak Bank. Some little bit of profit booking is something that you saw coming in, at least when Kotak Bank is concerned, because when you take a look at the stock, in the previous day, you did have Citi upgrading the counter to a buy and also initiating a positive 90-day positive catalyst watch as well. Other than that, you did have this week Jefferies also upgrading the counter to a buy. So it's been Kotak Bank that's been buzzing away throughout the course of this week. Some profit booking is largely what you saw coming in for that particular counter. Other than that, it's the healthcare sector that largely got a quick commerce pill coming in on the back of that, getting into quick delivery of medicines as well. Other than that, there's crude, of course, that we've got to take a look at near that 2-month high. And on the flip side, you do have the rupee that has hit an all-time low. Of course, we'll be taking the conversation then forward with our experts as well and taking stock of all of these questions about whether or not the RBI can then halt the rupee depreciation coming in, whether or not autos are going to be sustaining the kind of moves that we've seen come in for some of those counters, if they'll be in the fast lane as well this month. So for that, let's connect with our experts then. Ajay Bagga, who's a market expert, is joining us on the show today. Along with him, we also have Rajesh Palviya, Head Technical and Derivative Research at Axis Securities. Then, first of all, I'm going to take this question to you, Ajay, because the first one that we, of course, have to address is autos, right? Do you think it is going to be in the fast lane, the kind of move, the kind of rally that we've seen for this particular sector? Do you think it's likely to sustain then?
What had happened with auto, especially over the last 4 months, that expectations had got very muted. And we have seen a rally going into the new year. But again, that's more on the passenger vehicles and the tractors makers. The two-wheelers are still seeing a lot of pressure. So that's not really showing a demand reversal. That demand has picked up because the two-wheelers should have actually been, indicating to you if, especially the rural demand was coming back. So I would be careful of this auto bounce. I think it's more technical than fundamental based on what the December number, wholesale numbers again are indicating. What we have seen on the retail numbers is that October was a good month, then November saw softness. And let's see the retail numbers for December. That will give a better idea. More than the auto manufacturers, I would say the tire companies are looking better because of where the oil prices are. And again, but the oil prices have risen in the last 2 days. So, but still, I would say probably auto ancillaries would be better. This passenger vehicle recovery is more technical, I think, than fundamental. That demand is still not there to justify the kind of bounce that we have seen in the auto passenger vehicles. Two-wheelers, again, are still quite constricted.
Yes, point taken, Mr. Bagga. Of course, tractors have done well, two-wheelers have done well, but still the passenger vehicles haven't recovered that well. It's a technical bounce back. We will come to you for more questions on the show, but we have Rajesh Palviya also joining in on the show. Rajesh, thank you so much. First of all, both of you wishing a very happy New Year. This is our first weekly show of this year. Rajesh, we were discussing last week only that there is a possibility that since we have seen 200 DMA level for quite many days now, and if there is a pullback, it comes as a sharp pullback, and that's what we saw also. And whenever it has happened in historical data also, what reflects is that when we see a sharp pullback, the indices stay at high level for few more days. Do you think this is the case going to be?
So happy New Year to you as well as the ET Now team and the viewers of ET Now. After remain below to almost for 10 days below to 200-day moving average, now Nifty again back above 200-day moving average. So this is the positive development has happened in the first week of this new year. Though Nifty still failed to hold about 24,000 level on a weekly closing basis. But looking at the broader market recovery in last couple of days, this broader market recovery is clearly giving us sign that some confidence is coming back on street as we have crossed 23,800 and almost now trading near to 24,000 level. So we believe that if Nifty manages to cross again 24,000, 24,050 kind of level in the coming week, then possible rally can extend, and we may see level of 24,200 or 250 kind of level in the continuation of this pullback. So at this juncture, we are holding our long position with stop loss of 24,800. That's the important level to watch for on the Nifty. On the Bank Nifty, it is still consolidating in a range. The range for the Bank Nifty is in between 50,400 or on the higher side 51,700. This is the broader range which we have witnessed for the Bank Nifty since last couple of days. I think any breakout over 51,500 may attract short covering action, and then rally can extend to 52,000, 52,500 kind of zone. But I think still 50-day, 100-day moving average are acting as a supply zone for the Bank Nifty, which is placed at 51,600, 700 cluster. So I think these levels needs to take out by Bank Nifty on a weekly closing basis, then follow buying action or short covering action we may see in the Bank Nifty also. On the downside, the important support area for Bank Nifty is placed at 50,500, 600 zone. That's the important level. So at this juncture, some of the banking stocks are doing good, but still, if we look at the whole basket of banking stocks, they are showing a different behavior. So we believe that Bank Nifty may remain in the consolidation, but on the Nifty we have bullish view, and we believe that in the coming week 24,200 to 50 level can be seen on the Nifty.
Those are the levels that Rajesh is keeping in mind, but time for a very quick breather on the show. When we come back, we have more news and updates, so don't go anywhere.
Thanks for tuning in. You're watching Your Trades. We have Mr. Ajay Bagga to talk about the fundamentals of the economy, macro factors, and Rajesh Palviya to give us a direction on the technical front. Ajay, tell us, Mr. Bagga, since we know that macro factors have been weighing on Indian markets so far, but now will earnings be the bigger trigger? Since we are going into earnings season with a muted set of expectation, but clearly wherever we could see a earning visibility, maybe in the form of business updates, be a scenario like dollar index is on a surge, but still meta counters are not at all nervous because we do have business updates coming in from metal and mining space also. The kind of business update we saw from Avenue Supermart also. What is your reading on the upcoming earnings season?
Spot on, Priyanka. Even your opening comments and what you just said, markets are right now primed for a very poor earnings season. But what has happened with the quarter two numbers already, a large part of the downgrades have got factored in. And as the monthly operational analysis has come out, more and more the expectations have got very muted. So we could see that any positive swing by companies above the expectations will see an outlandish move in the stock. So right now, the good news is that the market is very sober, very pessimistic. Nearly the street consensus is emerging markets do poorly, a strong dollar, lot of Trump uncertainty, and all that will lead to poor FI flows into emerging markets. India is also seeing that dampener along with elevated valuations for India and poor quarterly earnings season and expectation of two more earnings seasons like that. So that sets us up for a market surprise on the positive side. Now, how much will companies deliver, that we will know in the next 3 weeks. We have two big events coming up. One is the earnings season starts next week, and second will be the budget. Again, budget, unfortunately, we see more tamasha, more talk than actual on the ground analysis. But the institutional investors, the kind of numbers they need is the fiscal deficit, the quality of your revenues, quality of your expenditure. How much are you going to put in capex? It's a 5-minute exercise for institutional investors, but we will get it known in a very drawn out cycle over the next 25, 28 days. So that has to be gone through. So I would say earnings, budget, and also what does Mr. Trump do? Again, the sobering assessment is that despite having very strong control of all three levers of power, the Congress, the Senate, as well as the White House, the majority and the intra-party unity is lacking. So today we will see how the speaker elections go through in the US House of Representatives. And there again, with one or two Republicans not voting for Mr. Johnson, you could see a logjam happening. And that will constrain Mr. Trump from his early day policies. So that could take time. But the market consensus is rampaging dollar, high US yields, Fed holding its hand, and FI flows getting constrained because of that. A lot of this could be surprisingly turning out to be much milder than where the market is sitting today. So I am hopeful because we have seen this miscalculated kind of certainty earlier in the markets. 2022 September, October, 65 out of 65 economists said there's a recession coming in the US economy in 2023. And about 26 months later, we have one of the strongest US economies running around. So this year we are going in with a very strong US exceptionalism on economy, on flows going into US stock markets, outperformance there, and we could be surprised and money could come into emerging markets. So let's wait and watch. But the street consensus is sober on India. I would go against the consensus.
That's what the street consensus then looks like. Thanks, Mr. Bagga, for that take coming in. It does look like, so we've had the Santa rally that's managed to elude us. So it does remain to be seen whether the pre-budget rally does find its way to the Lal Street as well. But Rajesh, I wanted to take this question with you about the consumption pack. What is the pecking order that you then see emerging for this particular space? And in terms of retail versus quick commerce, there's a lot of competition that is intensifying in that particular space. So who do you see ruling the roost? Is it retail? Is it quick commerce? What is your view here?
So I think in the current week, we have seen a traction in both the basket. We have witnessed a good buying action in most of the consumption-related stocks as well as in the new age companies. So I think looking at the current scenario on the technical front, I think FMCG basket can be looked at for some more recovery after this significant correction. But the new age stocks like DMart, Zomato, all these stocks have witnessed Policy Bazaar. All these stocks have witnessed a very strong buying action in the last couple of days. And the way these stocks are based, I think here there would be outperformance. But FMCG basket is also witnessing some buying interest. So I think stocks like Dabur, Marico, Tata Consumer, Bata India, all these stocks can be looked at for near-term to short-term up move going forward.
This rural recovery caveat which is playing on in the market clearly at basis that you've given us some of the stocks. But Rajesh, do tell us your specific recommendation also, and one very quick view give us on the Jan seasonality also, because the historical trend what shows is always Jan is a weaker month, but the kind of start we've seen, the FI's figure were not supportive, even the rollover figure was not supportive, but still it has surprised us. It is a positive start at least.
So again, there is a change in behavior.
Yeah.
The December month seasonality data was quite positive, but we have not seen that kind of data to unfold for actual in this December. And January again, the seasonality is showing it's 50% chances. But looking at the first 2 days of this market, I think that clearly shows that after a strong correction, there is a chances of recovery in the month of January, as we are going to have big event budget after the January month. So I think we are positive for January month, and we believe momentum can continue on the bullish side. Stock ideas, first one is from the automobile, that is Eicher Motor. Very strong breakout on a weekly chart. Stock is almost trading near to all-time high trajectory. The way stock managed to give breakout, we believe that Eicher Motor can extend its gain. 54.50 is our next target for the stock. So one can buy and accumulate with stop loss of 5220. The second stock that we like is Bata India. This stock has also shown very strong buying action throughout the week, and the way stock is now approaching to its multiple supply zone, we believe that Bata India may manage to give breakout of this supply zone, and then possible rally can extend to 1500 to 1510. Bata India can be looked at for buying for coming week, and keep your stop loss at 1430. And the third stock is from oil and gas sector, that is IGL. If you look at the weekly chart, stock managed to give breakout on the falling channel. Long built up was there. Stock is moving in up sloping channel on daily chart. Looking at the overall structure, we believe that IGL can extend its gain. Possible target towards 458 we may see in the coming week. So IGL can be looked at for buy with stop loss of 430.
Those are the three counters. There you have it. Eicher Motors, Bata India, as well as IGL making it to Rajesh's radar. But with that, thank you so much, Ajay, as well as Rajesh, for joining us on the show today. That's all the time that we had, in fact, on this edition of Your Trades on ET Now. For me, Shreyansi Singh, Priyanka Uppal, as well as the entire team that put this show together. Thank you so much for tuning in.